All right, and welcome back for the episode of Carnivore Trades. Today is Tuesday, June 25th, 2024. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it today. So markets here. Spiders finishing up $2. Q's got the biggest bounce up 5. And we talked about this yesterday. I said chips likely bounce. So SMH up 2.3, SOX up 1.8, and Nvidia was down about 20% in 3 sessions. So you're going to get a bounce there. 20 MA is going to hold. Usually the first hit of the 20 MA from an extended move is going to get defended, especially after like a parabolic move, which is what Nvidia had. And I said it's likely the Dow and the Russell would back off today, and that's exactly what happened. But what you're seeing here is not anything terrible. So the Q's up 1%, and typically when the Q's have been up lately, the Russell's just gotten pounded. And really, for it down 1/3% here, it made the low of the day, like basically on the first candle. And then we kind of just tested it twice and came off the lows by the end of the day. I'm not seeing anything terrible here for the Russell, and the Dow also on the weaker side. But again, nothing really terrible that led yesterday. And, it backed off today. So it's not like, anything terrible here. You can see we went into basically a 75% retrace of the move. So it should have backed off anyway. And again, bears do have a window here, like I said, but not really inspiring action, right? So you have no excuse. They have a silver platter. The yen is getting destroyed versus the dollar. We had some weak housing data today. We'll talk about XHB in a minute. That took a big hit. Home Depot, Lowe's getting smoked. VNQ got hit pretty good, although it did come nicely off the lows by the end of the day. I think, housing prices had their first, I think it was year-over-year dip since 2023, or something of that nature. I have Zero Hedge had it on there earlier. So, first drop in annual prices since June 2020. Not a big deal, but, housing got hit. And, we haven't had the greatest economic data lately. So, the bears have had a really good opportunity here to make move. We don't have the OPEX flows, the pre-OPEX flows or post-OPEX. So you've got volatility should be unpinned, and they can't even break 54.50. So it's just not very favorable here. Spiders volume pretty light. 35 million shares. That's really light. That's including a few blocks that went off after hours. So it's probably like 30 million at the close. You're seeing volatility down 3% on the day. VIXY down 2.25. So, this is why light volume is so beneficial to bulls. The bears need that volume. And the more we kind of just grind lower on light volume, my thesis is we get closer to that 4th of July. That's where that window just starts to shut there. And again, pattern-wise here, if we go to an ES, you can see it on the spiders too. It's not really any different, but it's just, we're just repeating these kind of flagging type stair-step type patterns, right? And you had the big one right here. So nothing really terrible here, and as long as we keep doing this and consolidating the up moves, this is just going to turn into another bull flag. That's kind of how I've got this mapped out. We can talk about, and I know you guys talk to me about this all the time. Trust me, I can make you a bear case if you want. How much time do you got? But it's the bottom line is volatility is pinned right at the index level, and you're seeing that over and over. What do I mean by that? SMH is up today. What's down today? IWM. What happened the last 2 days, right? SMH, Nvidia down. IWM up. Dow up, right? Something's up. Something has to be down. And that's just the way that things are right now. So the market's able to shrug this data off. Like I said, there's no excuse for bears here. They have a really good window to do damage, and they're not doing it. So that window is closing rapidly. The quicker, the more and more time we don't break 5,400, the more time we don't break the 20 MA, that window starts to shut, and this just becomes bullish consolidation. So again, that's kind of the long and short of it right now. Can we get a little bit of a dip into the into PCE? I think it's likely. I think that's likely afterward. But we don't start breaking these levels here. Again, it's going to turn more into bullish consolidation. That's my base case. Now, I do think chips may have topped out. So again, I think the SMH here, I'm kind of looking for a lower high here. And I don't want to get too much into it, but I think the chips are probably done. So we'll see if that ends up being true or not. Can other sectors pick up the pace here? Biotech, it's trying. You guys know I like IGV here. I don't think I'm missing anything when I say this is a nice bull pattern here on the weekly. We never made a new all-time high here. We got close. I think it wants to go up there and test that. So I do think that as far as tech is concerned, that can pick up the slack. I think Tesla here is consolidating and coiling up. I played this a few weeks ago, looking to possibly get back in this as well. I like the inverse head and shoulders there, and it's coiling up here. So I think you can have certain tech things back off, like Nvidia, but if you get Tesla to catch up, you get IGV to break up, and you get Apple, which is on a monthly breakout. That can just offset the Nvidia, right? So that's kind of my case there. And then obviously we know the Russell, can that catch up? Sure. What's the macro reason? Well, I don't think you need one as long as the indexes are pinned. If chips are down, something else will go up. So there's your reasoning there. But anyway, without getting too much into it, we'll see a lot of chop, I think, throughout the rest of the week. But we're kind of setting up for PCI. Tomorrow we got a little bit more mortgage data, I think. And then Thursday we get jobless claims and stuff like that. And then PCE data and all that good stuff at the end of the week here. Qs, you still got the 470 gap window, then you got the gap fill, 20 MA. 20 MA is minor, and then 460 is kind of your big level there. In the short term, the Russell 2000, I think this is trying to get a up kind of zigzag. Let me show you the RTY. Yeah, I think it's kind of trying to get a up here, pop, and then another kind of up move there. But yeah, it's holding up okay. Dow we talked about earlier, that did back off today. I think you had CAT, Goldman, and UNH down. Yeah, that's going to bring the Dow down. We talked about semis, talked about IGV. Transport's backing off today, but look, it came off the lows nicely. So big flush earlier, and then just a V-shape in the afternoon. So nothing really terrible. That could be a test candle too. I would say that's close enough to be a test candle. And it popped off the lows, so decent price action. All right, let's get over to rates here. Get over to our daily. There we go. So 2-year holding up. And not much to say about this, right? It's holding the lows, and it's really kind of, the volatility's really died out. So we know we're going to get a pretty big move here. Is that up or down? I'm not so sure yet. If it is down, I'm not expecting rates to go that much lower. You guys know that. I do like this falling wedge here on the 10-year. And again, perhaps we could see something like that play out. So I'm kind of looking for something of that nature. 30-year, you can make a case that's starting to bear flag here. So again, I think there's a likelihood we could go down and test lower prices here in yields in the short term, but watch that falling wedge pattern look there on the 10s. Let's see, maybe we could get down to the 618 there on the 30. It's not that far away. The more it consolidates, the more minor it becomes. So it could have to go down and test 4.2 if it wants to. But again, rates, volatility's really died out in that. XHB on the weaker side today, down 3%. I will say this, I don't like the lower highs. So you now have 3 lower highs here because you did make a lower low here. So I don't like that for XHB at all. It's definitely not something you want to see. Want to see that firm up by the end of the week. If not, it's probably going to go down and need to test, 96, maybe this trend line again, weekly 50 MA down in that area. I think those are very good bounce levels there. But XHB did back off. VNQ backed off as well, but it came nicely off the lows of 1.25, down just 1.25. As you can see there by the end of the day. And this pattern here is not bad. If that can just stay firm here, it can just go sideways and push through that. So there's redeeming qualities here, but definitely on the weaker side today for housing. We'll see what we get tomorrow with the mortgage data. XLF down 31 cents. Again, nothing really terrible here. Had a good recovery the last week or so. And it is certainly firmed up quite a bit. KRE on the weaker side down 65 cents. So after firming up yesterday, coming back in, and the same thing with KBE. But these are still holding up all right. Broker dealers here flat as a pancake, still inside of this little channel there. Oil here down 86 cents. So finally it's actually pretty strong earlier. It was stronger than I expected. Got all the way back up here, but then a lower high this morning. And again, this 82 level's holding. I didn't think that it was going to break that easily. We talked about the 618 there. So nice setup there. 8150. 8158 rather, whatever, close enough. And it is backing off. If this consolidates though, it's telling you it wants to go higher. So typically that's kind of how it works with crude, right? It goes up into July, and then it backs off. Probably until the election. So we'll see. But crude holding up okay. XLE holding up too. And again, just quietly, everybody was like, oh, tech caught a bid today. And it just went back to normal. What? XLE caught a bid too. It was up 21 cents with oil down. So again, like I said earlier with IWM, it was only down 1/3%. It's not like it got roasted like it normally does. XLE, it held up with tech. So that's a good sign to see the market being able to hold up. Other sectors hold up, and it's just pushing up against this channel here. Looking pretty good. We'll see. Maybe it gets another pullback here, but I think XLE's possibly setting up. XOP inside hammer, nothing wrong with that. And the same thing with OIH, is holding up here, green on the day. So energy, looking all right. Again, CCJ, we talked about uranium looking softer than normal lately, and it came in today. It came off the lows though. Weekly chart's still fine, but definitely starting to soften up on the daily. The NM, lower lows now, lower highs. So this is doing some technical damage here on the daily. I'm going to get rid of this trend line now. That said, the weekly is still, there's no problems. So the daily is softer, but the weekly and the monthly are still fine. The fact that you have an outside candle is not great, but as far as the pattern, you're still inside of that green. And it can stay inside of that and still be bullish consolidation. So that's your positive. The J, again, I think that needs to go test 23. Same thing though. As long as it's above this, you still have inside bar. So it's not the end of the world, but they definitely have softened up in the near term. Nat gas backing off today. This has just been all over the map here. It's trying for a higher low though. So that's interesting to me. But if it takes that low out, I think you have some support at 70. And then I think it gets a really good bounce at 260 on the Q contract, which it's going to roll, I think, in a day. So just be aware of that. But I have not touched it lately. Dollar index still pretty strong. Again, it continues to be strong here. So dollar looks like it wants to break out. That's not necessarily a bad thing for the market. Dollar started the year here. It went up. And this is where the spiders started the year, and they've gone up too. So those correlations aren't that reliable right now. Gold here on the cusp of a breakdown. So lower highs now. Inside pattern here, inside bar. Could be setting up. And again, I don't think it's going to go that much lower. But it is setting up those GDX down a little bit today too. Silver, good outside move down. I think that wants to go test 28. We'll take a look at that when it gets there. And then SIL here a little bit on the softer side too. Platinum down, rejection at the 20 and 50 MA inside of that. And then palladium here down as well. We'll see if that goes down for double bottom. It never quite got there before. And then copper here still just backing off here. I'm getting interested in this. So the more this just grinds lower, the more I like it. I'd love to see daily oversold. I don't know if we're going to get there. I think we're close to 4 hour. Yeah, we're close to get a 4 hour divergence there. So if that could puke into 425, I think I definitely like that. I'm definitely getting interested. Not quite there yet, but it's definitely getting on my radar. And then Bitcoin here. Took a nice winner on this today in the trading room. Yeah, I talked about this yesterday. It's similar to what I was just saying. So again, notice how the RSI just kind of, it's like you're just grinding out so much selling, but so little reward, right? It took you from, you went from 67 to 63, but it took like 11 days, right, to get there. It's a lot of energy for sellers to do all that selling, and that's all they get out of it. Then when you get this flush down, what do you think is going to happen? Oh, you're daily oversold. into the 200 MA, into this pivot here. 4 hours in the basement, and we get a V shape. So pretty, you know, for me, it was an easy kind of read there, that it was going to bounce in it, and it did. You also triggered on the, it's triggered on a bunch of time frames, but I use the 30-minute. You got an inverse head and shoulder right here, and I love how you popped through it and then back tested it with an inside bar, and now it's continuing to firm up. So as long as this holds higher, I think it's, you know, it's looking to 63. That was your last pivot. You got a pivot here at 63.4 to 63.5. And if we do a measured move, we can take that all the way up to 64.5, maybe 65. So I think Bitcoin here's got a low in place. Is that long term? Well, who knows? But right now it's a tradable low. And then you got all these moving averages up here that could get targeted as well. All three of them converging at the same time with a 618. You think it maybe wants to go up there? It's possible. So Bitcoin holding up nicely, and good rebound there. A lot of panic too yesterday, so good bid there for Bitcoin. Spiders here again. You know, as long as we're holding up here and just pulling back on light volume, that's not bearish. It's just consolidation. But, you know, bears have a window. They got to do some damage, though, and break some of these levels here. Got to at least break 5,400 on a closing basis before we can even entertain more downside. But right now, market's pulling back, and as long as we continue to see that cycle and those rotations, I think market is okay right here. So anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. See you guys all tomorrow.